What's going on, everyone? This is Jake Unfiltered. Please like, subscribe, whatever. So today we're going to talk about Robinhood stock, right? So Robinhood stock recently hit its all-time low, and then it bounced back up from like $14 last week, or yes, 2 days ago, Monday, I don't know. So January 10th, it hit $14.79. It's an all-time low. Okay, so is this stock a buy right now? Right? So the reason why people are scared of this stock is because it lost $1.32 billion in the September quarter of 2021, the third quarter, and people are a little nervous about it. However, the reason that they lost so much money is because they're building their platform, because it's still a new brokerage. You know, it didn't come out that long ago. I think it launched its app. So it was founded in 2013, right? So it has 3,400 employees. Okay, so right here it says the stock is overvalued. However, I don't know if they updated that recently. So it has a 1-year target of $39. So this website here called investors.com, Robinhood is one of the top IPO stocks to watch in the current stock market. The company boasted solid sales growth in recent quarters, and the company's potential is encouraging amid the surging popularity of stock trading among young investors. Shares are as far from their post-IPO highs. There is no current buy point. So I searched up if it's a buy right now. So the stock isn't a buy right now. Wait for the stock to form its first base, which would offer an initial buy point for more leading stocks and da-da-da-da-da. Okay, so investors.com says that it's not a buy. So let's see what Forbes has to say. So speculative cryptocurrencies such as Dogecoin is cooling off, so they're losing revenue because of Dogecoin cooling off. Robinhood Q3 earnings as it actually lost customers after posting record growth the first half of the year. Moreover, the Federal Reserve is likely to raise interest rates sooner than expected to fight inflation, and this could prove to be a net negative for the stock market and trading activity. Separately, the SEC has also been investigating Robinhood's payment for order flow revenue model, which entails selling the order flow of its customers to market makers. And this has created a big overhang for the stocks, as transaction revenues accounted for 78% of Robinhood's revenue in Q3. Separately, the SEC has also been investigating Robinhood's payment for order flow model, which entails selling the order flow of its customers to market makers, and this has created a big overhang over the stock, as transaction revenues accounted for about 78% of Robinhood's earnings revenue in Q3. So is Robinhood's stock a buy following the recent sell-off? We think it is. While the concerns regarding the company's near-term outlook are legitimate, we think this is more than priced into the stock, considering it has corrected by over 75% from its all-time highs seen in August 2021. Robinhood has proven to be agile in innovation, and it has a good understanding of young retail investors, and this should help it adapt even as the market cycle eventually turns, or if it faces setbacks to its revenue model. The company has also built a sizable customer base with more than 22 million funded accounts, and this could allow it to cross-sell other financial products and services. Robinhood cryptocurrency push is also likely to be a meaningful driver growth going forward, as current cryptocurrency brokering is typically very lucrative. Rival Coinbase posted net margins of 33% last year. Robinhood has been adding new features to its crypto service and is likely to launch a crypto wallet feature this month that will enable users to send and receive cryptos. I did not know that Robinhood was actually going to launch their crypto wallet this month. That is very interesting. So not only are they doing really well, and they have 22 million. They have 22 million accounts, 22 million customers buying stocks on their brokerage. I'm sure some of them aren't actually buying them, so I would say like a few million might not actually use their account, which would that's just a guess. And this wallet, they're gonna launch the wallet this month, which means in January. So, I mean, this could look really good for Robinhood, and it might pump the stock price up. It is a speculative play. And the stock market is going through a lot right now with this inflation, the interest rates, so it might crash the stock market even more. And we don't know if Robinhood's going to keep going down or if it's going to stop here and consolidate at around $15. Maybe it will go back up soon. Robinhood stock now trades about 15.60 per share, trading at a little over 6x our projected 2022 revenues for the company. A cheap valuation in our view. We value the stock at about $25 a share. So Forbes or whoever wrote this article values Robinhood at about $25 a share. So these people, they really know they know how to do the discounted cash flow. They know how to do they know how to find the intrinsic value. Now, it's really hard to find an intrinsic value of a speculative stock, like a new IPO. Like it's a lot easier to find that with a stock like Apple that has, years and years of data to back it up, where you can actually use the last 5 years, the last 10 years to, figure out what the stock is doing for in the future. Robinhood Market is best known as zero commission brokerage app that millennials turn to. Yeah, I mean, Robinhood was the first brokerage that I ever went to cash in on the soaring COVID-19 stock market and to ride the meme stock wave. Now, I'm thinking the meme stock thing I don't know how long that's going to last, but I'm feeling that the meme stock thing is starting to die down. A lot of people are losing money, and it's going to cause people to not want to invest in meme stocks anymore, because you bought Wish at $8 and it fucking dropped down to $2, and you're like, I just lost all my money. Do I really want to keep putting money into this stock that keeps losing its value? How do I know it's going to go back up? I don't. And all the people that told you to hold actually sold their stocks and kept telling you to hold, and they screwed us over and left us holding the bag. Like, they're just as bad as the hedge funds manipulating the market, right? Robinhood stock, which was listed in late January, hasn't really delivered for investors since its listing this summer. While Robinhood was listed at a price about $38 per share, it currently trades just about $42 after briefly rising to as much as $70. So what's holding Robinhood stock back? We think there's a couple of factors. Retail traders who powered Robinhood's growth are likely to be less interested in stock trading, as they headed back to the office to seek entertainment outdoors following the COVID-19 lockdowns. For perspective, Robinhood app downloads, which can be viewed as a rough estimate of new account openings, declined 78% over quarter 3 2021 versus quarter 2 per data from Apptopia. Other brokerages and crypto trading platforms have seen much smaller declines in comparison. Well, this is what I'm thinking. That, all this meme investing, the whole Reddit thing, all these people just rush to Robinhood to start trading on these meme stocks. So, and it's awesome because we got a whole bunch of new investors. So all these new investors, retail investors, got into Robinhood, and half the other country, 50% of the country, doesn't invest in the stock market. So, there's always going to be people that don't invest in it, and then there's always going to be the people that do or want to try, and they're still growing. It just wasn't that surge of the meme stock movement and the Dogecoin movement. All these people signed up for Robinhood to get Dogecoin because at the time Coinbase didn't have Dogecoin, and all these people want to buy AMC and GameStop, yada yada yada. So obviously the new members are going to die down, because if it spiked at that rate for 10 years, there would be nobody to even join Robinhood. So it's good that we're going to have a nice steady growth, and it's better to be steady growth than no growth, right? There also appears to be some regulatory concerns for Robinhood. The company's core equity and options business is facing some scrutiny from the SEC over its revenue model, which entails selling the order flow of its customers to market makers. The company also recently warned that rising regulatory scrutinies of cryptocurrencies could pose risk to its business. For perspective, payment to order flow accounted for about 38% of revenue in Q2 2021, while cryptocurrencies accounted for 41% of total revenue. That's insane. They didn't even make enough money. They literally made more money off of Dogecoin than the entire stocks combined. So payment for order flow is whenever they charge you a little more for the stock. So they say they have the best price, and then there's other companies that do the exact price. So the exact price is actually better than the best price. And Robinhood does, so they add 1 cent, right, to a stock. So you buy a stock for $14, you're going to pay $14.01, or just a fraction of a cent. So you're literally just paying like the tiniest fee for using their company, using their services, which I personally don't mind, because I don't buy a million shares of stock at once. And if I did buy a million shares of stock at once, I wouldn't be doing it on Robinhood. I would be doing it on like Fidelity, like an actual good brokerage. Now, my Robinhood portfolio is just for messing around, for buying the meme stocks and buying all these like speculative stocks like Robinhood. And Fidelity is for my retirement, and it's also for important like companies, and then also like ETFs, index funds, and things like that. Robinhood stock has relatively limited float currently and could be seeing some pressure in anticipation of lockup expires and plans of large shareholders to liquidate their shares. For example, in early August, the company said in a SEC filing that some existing investors who bought into the company via private placement plan to sell close to 97 million shares over time. So all these people that invested in Robinhood before they went IPO, they're planning on selling 97.9 million shares over time, which probably would have been better if they just sold it as soon as it IPO'd. But I don't know if they're allowed to do that. They might have like restrictions or something. So we value Robinhood stock at about $39 per share, slightly below the current market price. So they are planning on getting more into the crypto space. I mean, honestly, I'd rather buy my Bitcoin in my crypto on Robinhood, because I feel like Robinhood is probably one of the safest platforms to buy crypto on. So people buying Ethereum and Bitcoin on Robinhood want a wallet feature so that they can use them without having to convert them to dollars. This has been a much sought after feature and could enable the company to better compete with the big crypto platforms such as Coinbase. Separately, last week the company said that it would allow users to set up recurring investments in crypto assets, essentially setting a specific amount to be invested on a periodic basis automatically. Robinhood's interest in crypto is understandable because cryptocurrency accounted for over 51% of the company's total transaction revenues, eclipsing its core options and equity trading business. In fact, over Q2, customers appeared to be signing up on Robinhood primarily for its crypto offerings, with more new customers placing their first trade in cryptocurrencies rather than equities. The increasing crypto exposure should also help de-risk Robinhood's revenue streams to an extent, as its core equity and option business faces mounting scrutiny from the SEC over its payment to order flow model, which I don't really find a problem with if they're not really ripping you off too much. I mean, how else are they going to make money? Just options? Whatever. The SEC doesn't really control the crypto market. On the other hand, that said, crypto market is cyclical, and Robinhood's revenues could be even more vulnerable in a downturn, giving its focus on retail traders and large platforms such as Coinbase, who derive an increasing portion of sales from institutions. So like you go on like Voyager, Coinbase, freaking any like crypto platform, they charge you a huge fee to buy Bitcoin. You can just go on Robinhood and buy it and you don't get a fee except for the little slash of a percentage that they take from you. Which, I mean, it's just like buying crypto on any other platform. But you can also measure the price of Bitcoin on Robinhood onto Coinbase or on the CoinMarketCap or CoinGecko or whatever, so you can see what the price really is on all these platforms before you buy it, to see if you're getting ripped off or not. That being said, we don't think that Robinhood can count on its crypto business to drive consistent growth. The cryptocurrency market is extremely volatile, and it's also subject to multi-year cycles. Yeah, I agree. I mean, Bitcoin might just stay down for a long time. Like, I feel like people are starting not to buy it because it's so volatile and nobody wants to risk their freaking life savings in crypto. And people only put, like, the smart people only put the money that they can afford to lose in the cryptocurrency. So yeah, I mean, that's pretty much it. I feel like it's just repeating everything. But yeah, let's see. Hood. So I got into Hood at $23 a share. I mean 21.07 a share. I'm thinking about buying more now that it's starting to level off. You know, it just went down. I mean, I don't think it's actually not really starting to level off. But look at this down here. Like, it does look like it's starting to come back up a little compared to like everything else going on here. You know. Like, it only leveled off for like 2 days though, and it could keep dropping. Do not forget that Robinhood could keep dropping, because Robinhood is a speculative IPO, and we don't know what's going to happen. However, this new wallet coming out could really help Robinhood a lot. And whenever the SEC is done, pressuring and trying to do everything with that payment for order flow, like once that's over with, everybody's gonna like I think people are gonna start investing more, but at the same time, people are gonna be selling off their shares of Robinhood that were early investors. So I mean, that's not good, because that's a lot of that's 97 million shares. That's a lot of shares that they're gonna be selling off, possibly. I mean, it's not for sure. So Robinhood, I think they're doing all right. They got a good customer base. I think everybody is already starting to forget about the GME, the GameStop movement, and them screwing them all over. And I personally really don't care about that, because I wasn't investing in them. And, but it does matter. Like, you can't be doing that if you're a brokerage. And I think that they're probably not going to do that anymore. I think they're going to change their ways because of the blowback they got from doing that. But for today, that's all I really got. I'm sorry for making this video so long. Please like, subscribe, comment, tell me what you want me to talk about. I'm sorry I haven't made a video in so long.